Hey, Ayla, how are you? Can you hear me, Ayla? Okay, I'm guessing Elena can hear me. Hopefully, Ayla can chime in right now in a little bit. Once we're gonna get started, probably like in a couple minutes.
they're gonna get a certificate that says they know all this stuff. And then they pass the test.
So hello everybody who is on Zoom.
Kevin,
Kevin is our speaker, and he says that normally he's very strict about everybody being here in person for his class in order to receive his certification. But he's kind enough to make an exception for us, provided that you are turning on your camera. So if you are able to turn on your camera, you can stay. If you're not able to turn on your camera, then you cannot stay. So thank you for joining in, but those are the rules. All right. Hi, Nancy.
hello. See, you guys are good looking people. Why wouldn't you want to be on camera? There you go.
There you go. Jessica, good.
Is the volume on? 'Cause I can't.
Yeah, but if they talk, we'll be able to. I have turned it up all the way. So we'll listen. Yeah, Elena talk right now, and you can hear it on the TV.
Okay. Sunny, if you can, please turn on your camera, then we can be in the meeting. Okay. So I don't know if I know this lady. You don't know? Hi, Amber. Hi, Amber. How are you? Nice to meet you. She's here. All the nice posts that we see. Yes. There we go. Like how I found it. Good. That's good. Oh, well, you're probably right. I don't know. My son goes down to the Eric Big there. To go try the course. Okay, Mama. I like it. No, I'm not that Eric. It's not. How are you? That is a good one. Yeah. Like, you over it? No, likewise. Yeah. Oh, and then, he got mental shins, so. Now he had but sometimes old kids are. Oh, definitely. Yeah. Definitely. I know.
Doing great.
I know. I know. Oh, I know, that's a good thing. Yeah. Right. Doing good, having fun. All right, but you're just fun and right here. That's a good thing though. Right? Absolutely. Of course. Do you guys have your location in Rhode Island? Yeah, but we have our here. Okay. Yeah. I see. That is right on the strategy. We have to have. Yes, everybody should. Yeah, no worries. I have a feeling that's what I should. So. I think we want to get started. Oh, it's okay. Sorry.
Everybody's here. You guys know. Is there a way we can
Do you
move
want to
that
move them?
some area because it might, I think on some of the other slides, it might block some of the information.
Just maybe put them up here, maybe.
I don't know. I don't know. Each slide I don't have in my heart, but yeah.
Yeah. Or maybe,
Well,
because I could put them like this, but then we'll only be able to.
I don't know, like every slide, like
Yeah.
there might be photos, but I guess we could figure out as we go along. You change
Should this maybe work right there?
Put them up top.
Yeah.
Yes. Let me see.
It's been a while.
Click on this. Oh, yeah. And I can-
I guess
We can move. I can move them while we're going on.
I appreciate that. I'll keep you on your toes. On your toes.
Okay.
I'm gonna head back and I was gonna go there.
Okay.
Those gentlemen joining us or?
Now, you, are you still?
Oh, I did there. Okay, cool. Thought they might be.
So it's like, no.
Oh, that's it.
All right.
Is that what we're talking about?
I know that. You guys want to introduce yourself or you're gonna get started?
Just a
You want to get Bridget?
You can get it.
And we can shut off the net.
What are y'all doing? Right? What a beautiful day, huh? Yeah, it's absolutely gorgeous. Anybody live up here in this area? I live in Encinitas. You guys are out on West Wednesday. We got hail.
Oh.
I took pictures posted on Facebook of all this hail, all this looked like snow all over the ground in San Diego. And my friend's like, "Where you at?" I'm like, "That's San Diego." I'm like, "You gotta be kidding me." And it went
One day, hail.
last Wednesday in the middle of the night, I thought somebody was trying to break into my house. I kept hearing this bam, 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 bam. And I woke up and it was hail. Just pounding all the cars in the parking lot in our house. And in the morning I woke up, it was frozen, it was still all over the ground. Crazy. I'm like, okay, now hell has officially frozen over. How you doing? All right, go ahead. Introduce
Okay, hello.
you guys.
My name is Mally and I'm with the Lead Escrow Services and we're very happy to be here to serve you and bring educational material. And I have my team with me. Lisa is one of our wonderful escrow officers. Hi. Bridget, would you like to introduce yourself?
Hi, I'm Bridget. Yeah, I work with Mally. We do business development. And so if there's anything you guys need to help with your business, we're here for you. All of our information's out there and there's some really great little takeaways for you guys too.
All right.
Good. So thank you for having us here today. I appreciate it. Just a plug, a shameless plug for these ladies in Elite Escrow. If you guys aren't using them, you need to start. I've been mortgage broker for 34 years, so I've dealt with numerous escrow companies in my time, and I got introduced to them about a year ago. And I gave them a deal, and they knocked it out of the park. and they've knocked it out of the park. Their escrow team is completely hands-on. And for me, it's really cool when you have an escrow and after it closes, then you find out all the landmines that they handled that they didn't involve me in. That's awesome, right? Because my job is I go get the business. Call me if there's an atomic bomb, then I want to be involved. But the little minutia stuff that sometimes some escrow companies, oh, we need your help with this. But why am I paying you? You know what I mean? That's your job. But I can tell you how many times after the fact, like, well, now I can tell you what really happened. And I'm like, and I had no idea. But they handled it and my clients were happy. So that is a great escrow company. They're amazing. They're always telling me what's going on. I never have to find out from them what's going on. That's also really cool. That's great
I
communication.
second that,
So,
that is true.
yeah. So Rosalinda, right? Is that her? Rosalinda and her team are just crazy. They even work. Sometimes I've gotten texts from them on a Saturday. I'm like, you're working on a Saturday, you know? So, okay, no, I'm a schlep because I'm not. So I'm watching college basketball while you're working on my loans. Okay, great. Anyway,
Plenty of Saturdays.
right? Yeah,
Yeah.
I have worked my share of Saturdays and Sundays, and it's happening now too, and that's good. I'd rather be busy than not. So, my name's Kevin Monahan. I've been doing mortgages, like I said, for 34 years. So I work for Prime Investment Financial. They're down in Mission Valley, but I work out of my house here in Encinitas, and I've been teaching this class for like 7 or 8 years now. And the reason I enjoy it is my dad was in the Navy, my grandpa was in the Navy, my uncle was in the Army. You know, I guess I let them all down. I didn't go in the military. So I tried, but they wanted me to be a thermonuclear submarine torpedo loader. I'm like, no. No, what am I get out of the Navy? How am I gonna do what what am I gonna do with that? Hey, I can load a torpedo. Great. Well, but we sell mortgages. How low yeah. So I was like, forget it. But I digress. But the reason, so that's why I like to help veterans is because they're also honestly they're not when they leave, and I'll talk to this later on. When our military leaves, when they're discharged honorably, they literally get an envelope and they have a class. They just hand them an envelope and it's all their benefits, but they don't explain any of it to them. And you got a lot of veterans out there that have no idea what they're qualified, what their VA entitlement to buy a house is good for. And I'm like, that's crazy. They're like, here's your benefits. Thank you for your service, and off you go. And a lot of them then get talked into doing loans, because FHA loans or VA, because they're all these myths, which we're going to cover, that don't just aren't truth. And so I'm like, well, this has got to stop. We gotta teach her. Who's the number one employer in San Diego County? Huh?
County.
In San Diego County, who's the number one employer?
Say the military.
The military, exactly. We got Theo. How many? We got four or five bases: Camp Pendleton, Miramar, Coronado, whatever. We all these bases. We have a military central, right? And we got all these military people that don't know that they can buy a house with no money down. And that there's a lot of other stuff we're going to cover. But here's a quick question: how many of you guys know what the minimum FICO score is for a VA loan?
640.
Trick question. There is none. See? Right? Trick question, which we'll go over later on. But that's my point, right? People are like, are you kidding me? Yeah, actually, and we'll go into this later, but the VA does not have a minimum requirement. It's the bank that you apply to that has what we call overlays. They're the ones that enforce their own credit score requirements. So what'll happen is a veteran might come to Wells Fargo and they might have 640. I don't know what their requirement is. I'm just spitballing. And the next thing you know, you don't qualify, your score is 630. So the veteran then just thinks they're done. I don't qualify. No, it just means you don't qualify at Wells Fargo, but they don't know that. So what you're gonna learn today is we're gonna go through all this. We're gonna learn the ins and outs, and I can guarantee you this, and I have no problem saying guarantee. By the time you leave, you're gonna know everything you need to know to help a veteran buy a house. There's just so many things, and there's gonna be a lot of myths too that you probably have heard that are gonna get totally blown away. I can tell you right now, every time I teach this class, I get these looks. I'll look around when I'm telling stuff, and they see the wheels spinning in their head, going, "I didn't know that. I didn't know that. I didn't know you could do that." And then I also know a lot of people are already thinking about some military people they can start reaching out to. So, having said that, Couple of things, housekeeping notes. If you have to go to the bathroom, that's not a problem. Also, I don't mind questions during the presentation. You don't have to hold them to the end because by the time I'm done, you might have forgotten what it was. So please ask a question. My dad always used to tell me the dumbest question is the one that you don't ask. So what you might be thinking, somebody else wants to think, but they're afraid to raise their hand. So just raise your hand and ask it and let me answer it, and go through that. And then at the end, we will take a test. So pay attention, there will be a test, and we'll go from there. Okay.
Oh, also, real quick, Kevin always, you can take notes, but you'll be sharing the information after, right? So you don't feel like you have to write everything down and remember everything.
Yeah.
Cause you'll get a copy of everything.
I will send you this.
But sometimes it's nice to be able to take notes, so.
That way
For
you
those
can
of you
reference
that
this.
like to, there you go.
Yeah. Yeah, I always like to take notes. I just think it was something about when it goes from your brain to the pen to the paper, you just remember it better, And then there's some people that just can hear it and just remember it. I'm not one of those people. All right. So any questions before we start? All good? All right. Let's rock and roll here. So it's a VA loan. So a VA loan, obviously it's backed by the VA. Okay. And a veteran has it gets a certificate of eligibility, which we'll go through on screens later. But when they are honorably discharged, they get their certificate of eligibility, which allows them to buy a home with no money down with the VA. Now, the way it works is it is 100% financing, but the effective loan to value is actually 75% of that because what the VA does is the VA guarantees 25% of the loan amount to the lender. So in the lender's sense, let's say they're giving a veteran $500,000. Well, let's say 400, make math easy, right? So I'm a veteran, I'm getting a loan for 400,000. Well, the bank looks at it as actually 75% loan to value because the VA is going to guarantee 25% of that if the loan defaults. So basically the bank is giving me a loan for 400, but they're really only on the hook for 300. Okay, the VA is going to guarantee that other $100,000 if it goes into default. Okay, so that's why the banks I don't know why banks don't like people don't like them, but VA loans are great, guys. I mean, we're gonna go through this. No money down, no minimum FICO score. I've gotten loans approved with debt ratios at 70%. 70. And when typically it's got to be 45 because the VA liked the profile so much they said we'll do it. So those are some amazing things. So 75% is the effective loan to value on every VA loan. Okay, so that's why the banks enjoy doing those. Over here. Next one. VA loan rules. They have to be a veteran or an active duty service member. Later on in the presentation, I'll show you the qualifications for active duty, as far as how much fleet time that they have, how much they have to actually, if they're currently in the military, how long they have had to be in the military before they can get it. A veteran automatically gets it as long as he's honorably discharged, which we'll go through later on as well, because there are some other things that they have to do. What's just the VA is not like and then the key one here. So the VA guys is not the lender, just so you know. Remember, the VA is the guarantor. All right, so your lender is whoever they get the loan from, Wells Fargo, Bank of America, my company, whoever I choose to sell the loan to. They're the lender. The VA just is the guarantor of the loan. Okay, so they don't actually get a loan, and their statements come from the VA. They're going to come from whoever closed the file. Okay. All right, here's some things too. Here's some more. This will dispel some more myths. Veterans can use their VA loan as many times as they wish. You may be surprised how many veterans I know think that they only get, since they used it once, they can't ever use it again. Nope, they can use it as many times as they want. Buy a house, sell it, pay off the loan, and they go and buy another house. Because what does our military do with our military? They move them all over the country, right? All over the world, right? So you got to be able to have the flexibility of being able to move and sell your house and buy somewhere else and use your VA again. So it can be used as many times as they want. Here's a kicker right here. This one nobody ever gets. A veteran can actually have 2 VA loans at one time. Okay, and we'll go over that as well. But a lot of people think that you only can have one at a time. That's not true. What happens in a situation like this, I'll give you an example, is I'm in San Diego, and all of a sudden I find out they're going to move me to Virginia. I'm gonna, but I don't want to sell my house here. All right, because I've got a lot of equity in it. I don't want to sell it and I want to keep it and let it continue to rise. So what happens is I move to Virginia and we'll go over this. There's a formula. Depending on how much entitlement I have left, I can use that to buy another house in Virginia. And the neat thing is my departing residence, I can actually turn it into a rental and use the rental income to offset that mortgage payment so I can qualify for another mortgage wherever I'm moving to. Okay. So just so you know, because that's a lot of people are shocked by that one. You know, and even when I first started teaching class, I didn't know that. So yeah, I wish I would have covered that, but check this, guys. No limit on the size of VA loan. Look at that. 9 million was the biggest VA loan ever done. $9 million, no money down. Now, I can tell you one thing. This person was not in the military when they got this loan because I've been doing military loans and admirals don't even make anywhere close to be able to afford a $900,000 I'm guessing they were a civilian now with a really good job, but they had their VA entitlement. But President Trump, when he was in president the first time, they used to have loan limits. He said, forget it. If a veteran wants to buy a $9 million home and they can afford it, they can qualify, so be it. So again, another myth. Some of you guys might know that. That's another one that a lot of people are like, oh, there's a loan limit. I can't buy that house. Oh no, if you can qualify, they'll give it to you. Okay. So that's huge, especially in San Diego, right? I mean, you know. Veterans can still get a VA loan even after having a foreclosure, which we'll go over later. But what happens there is if a veteran has a loan that goes into foreclosure, he's got what's called burnt equity. So whatever the VA had to bail him out, how much ever they lost if they had to sell the home and they lost on the sale of the home compared to what they owed the VA, if the veteran makes that up, so let's say the VA had to cut a check for 50 grand, right? If the veteran wants to go buy another house, he'll have on his certificate of eligibility that he's got $50,000 in burnt equity. So what he would have to do is before he buys the next house, he would have to give the VA back that 50 grand. He can't finance it or anything like that. He'd have to come up with the 50 grand. And then if he does, the VA would be like, okay, now you can go ahead and use your benefit again to buy another house. Okay. So just because they have a foreclosure doesn't mean you can never do it again. Gotta just pay back the burnt equity. Okay. Anyway, oh, by the way, I've been here half my life, but I'm from Chicago, so I talk fast. So if I'm talking too fast, let me know. I kind of forget that sometimes I'm like a mile a minute because I know this stuff so well. So I will not be offended if somebody just gives me the, hey, slow down signal. All right. I want you guys to all absorb this. My kids have no problem telling me, yeah, you talk too fast. I walk too fast and I talk too fast. So, some VA loan features. So appraisals are too restrictive. That's just not true. Okay. Now I'm not going to say I haven't had a VA loan where the appraiser kind of messed things up, but I'll be honest with you, in all my time doing VA loans, I can only remember maybe a couple where the VA appraiser was kind of being difficult. Not seeing it, I haven't had one in a long time. And I've done quite a few VA loans in the last 2 years, and I haven't had any issues. I'll be honest with you, the ones I'm having the most issues with are FHA appraisals. Those are the ones lately that are just killing me, with appraisers marking everything subject to over the stupidest things. I'm like, really? But on VA, really haven't had that problem. So again, can it happen? Sure, but I don't think that's a reason for people to steer people away from VA loans because, oh, well, the appraisal is probably going to be an issue because VA appraisers are conservative. I digress on that one. Appraisal are as expensive as much as expensive as much as you might think. The VA regulates the amount, and those are published on their website. So that is a cool thing because I don't know if you guys noticed. Seen the appraisal fees lately? Have you guys seen the closing statements for some of these borrowers? Like just a single family residence, no hoopla, $750. Like for an appraisal, I just did one where they had to get an appraisal and a rent survey, and it was $950. Like for a single, I'm like, seriously? When I got in the industry 34 years ago, appraisals were $250. Granted, that's when we didn't have the internet and Wi-Fi. Clients actually had to come in and fill out paper applications.
We also didn't have management companies.
Right, yeah, exactly. Oh my Lord, yeah. So at least the veterans are protected from some of these appraisers not charging ridiculous appraisal fees. Okay, so the VA funding fee. All right. So as you know or may not know, so if a veteran on a certificate of eligibility, there's a form later on, we'll show you. It'll show if he's exempt, he or she is exempt from the VA funding fee. Okay, the VA funding fee is kind of like, it's a one-time lump sum payment that the VA collects. What that money does is goes into a fund later on, so that if it's basically like a huge giant fund, so if they end up having foreclosures, that's where the VA can pull that money from, because remember, they guarantee 25%, so that's where that big pool of funds comes from. All right, now the good news is if a veteran is exempt from it, they never have to pay the VA funding fee. And your question is probably, how do you get exempt? If you're a veteran that's on disability. So if you are if your certificate of eligibility says exempt, then that automatically lets me know I don't have to charge you the VA funding fee. And as you can see, the first time you use it, if you're doing no money down, where is that? It's 2.3% of the loan amount. So just to make math easy, on $100,000, that would be $2,300, right? But we don't have houses for $100,000. So, but you can see where this number is going, right? If you're buying a house for 500,000 or 600,000, that number gets pretty big, and it gets added on top of the loan. They don't pay it out of their pocket. We'll finance it for them. Okay, the VA funding fee. Now, if they want to pay it because they don't want to finance it, they can. But I've never had a client say I'll pay it. No, they'll just let it finance it. So if they're exempt, they never have to pay for it. Then after they use their first time, so remember, they can use their VA as many times as they want. The first time, if they have to pay the funding fee, it's 2.3%. Every time after that, though, if they try to refi or they buy another house, now it's 3.6%. So it's really cool if they're exempt. I mean, unfortunately, to be exempt means you have a disability, which that stands. That means you got hurt pretty bad, or it could be mental disability. But and then sometimes veterans will put down money because they want their payment to be a certain amount. So they're like, I want to put some money down. So if they put down 5%, but then less than 10, then it's 1.65% is the VA funding fee. And then after that, it's still say, the neat thing is it's 1.65. And then if they put down more than 10%, it's always 1.4. Okay. Cash out refinances, same thing. First time, 2.3%. Second time, 3.6%. VA IRRLs. So these are my favorite loans. VA IRRLs, it stands for interest rate reduction loan. So that's for a client that's got a VA loan right now. And it's basically like a streamline. So the VA works, I pull your credit at 1003 and we go to closing. There's no appraisal, there's no income documentation. They just make sure you have the credit score you need to get the rate you want, and we close escrow. So VA IRRLs take maybe about 14 days at the most. And well, I've been doing a lot of them lately because of the last couple of years. Even though VA rates are really good, the VA was like everything else, the rates were high in the last 2 years, right? So I've had clients at 6.8, and I've taken them all the way down to 5%. And that's huge. Saving $500-$600 a month from their payment, and so they're beautiful. So interest rate reduction loans, just I wish I could do those all day long, right? I mean, they're the easiest thing. Application, credit report, close, done. No income documentation, nothing unless there's something to explain. We're fine. Loan assumptions, same thing, 0.5%. And we'll talk about loan assumptions because people always want to know about how the VA, somebody can assume a VA loan. I'll just nip this in the bud. You know that the person assuming the VA loan does not have to be a veteran. So if any one of you wanted to buy a house that has a VA loan on it, you could buy it. You don't have to be a veteran. You just have to qualify for the loan.
But if that happens, the balance still remains on the veteran, right?
Yes. Yeah. Yeah. So that's exactly. It kind of it ties up their ability to go and buy something else.
Unless
Until
the veteran comes in.
Correct. Right. All right. And then again, here we are, the VA funding fee. You don't have to pay it if you're connected, if you have a disability, receive retirement pay or active service pay. Here's a neat one. The surviving spouse of a veteran who dies in active service from a service-connected disability doesn't have to pay the exemption. And a service member on active duty who provides on or before the date of loan closing evidence that they've been awarded the Purple Heart. So those three are ways that you don't have to pay the VA funding fee. But like I said, if you don't know, your veteran will know because it's right on their certificate of eligibility. It'll say VA funding fee. If it's blank, that means they pay it. If it says exempt, then they don't pay it. Really, really easy. Right. Who qualifies for a VA loan? Okay. So for qualifying active duty discharges, right, for, you want to do honorable. And then there's general and honorable conditions. And then people who do not qualify, if you're dishonorably discharged. Bad conduct, clemency, entry-level separation, or undesirable. I'm still trying to find out. I don't know what that means. I'm like, when they give me this information, one of these days I'll try to find out what does undesirable mean? You don't like the way I dress or smell. I don't know, but undesirable. And then, so reservists have to be honorably discharged. And if it's any other type of under discharge, they're not qualified. That's for reservists, but it's really simple. Honorably discharged. It's on their form that you're going to get from the borrower. It's called a DD 214. You'll ask for your borrower for that and your certificate of eligibility. Those are the two forms I need from them. The certificate of eligibility lets me know that they don't have any burnt equity and if they're exempt from the FIA funding fee. And then the DD 214 lets me know everything about them when they joined the military, their last rank, and if they were honorably discharged. All right. So I've only had one loan where a guy didn't know and didn't bother to tell me, and on his DD 214 he was dishonorably discharged. I'm like, you don't qualify. He's I tried to tell me he didn't know. I'm like, okay. Okay, you didn't know that you were dishonorably discharged. Yeah, I guess it happens, right? Okay, so I don't know if we can move that. That should be fine, right? So these are when we were talking about how do you know if you're active duty or if you qualify. So veterans is really simple. It's on their certificate of eligibility, but if any veteran was in World War II and served during this time and had 90 days of active duty in World War II, they automatically qualify. Post World War II, if they had 180 days, they qualify. If they're in the Korean War and they were active for 90 days, so as you can see, these are all your veterans. And then just basically goes down through all these wars. So if you had a veteran that served in any of these wars and met any of these guidelines, they automatically qualify. You really don't have to worry about that because you're going to ask them for their certificate of eligibility. That's going to tell them did you either qualify or don't. If they don't, their certificate of eligibility will let you know they don't have enough time. Okay. If you're on current active duty, this is the bigger one, right? So people that are currently in the military, all right, if they're where's it? My state. Yeah. Okay, I got it right. Currently on active duty, 90 continuous days of work. That's it. Boot camp does not count. Okay, so their first night, so when they're in boot camp, that doesn't count. It's once they graduate from boot camp and are given their job, the clock starts ticking. It's active duty, 90 days. It's all they need, and they automatically qualify for a vehicle. Okay, 90 active days. Your National Guard, that's a little bit different. It's the same thing. It's got to be either 90 consecutive active days, or if they don't have, if they never get called to duty, and they just are what I always call them weekend warriors. But if once they have 6 years of being in the National Guard or the reserves, they'll automatically qualify. So it's 6 years, or if a person in the National Guard or the reserves gets called to go to Iraq or something, and they're there for 90 days, they now qualify. Okay, 89 days, they don't qualify. So believe it or not, there's a strict rule about that. I had a client who had 85. I'm not joking. 85 days, and they don't make an exception. Like, sorry, because he was a reservist. He's like, I served in whatever, and I'm like, I got the thing. I'm like, dude, I was on the stage 85 days. I'm like, oh, 5 more days. They could have given you 5 more. So again, this is all on their certificate of eligibility, but it's always nice to know if they ask you, especially your active military, because they might say to you, I don't know if I qualify yet because I'm still in the military. Well, then your next question would be, are you full time? Yeah. Have you been in your active duty for 90 days? Yeah. Well, then you know that they're going to qualify. And when they go online to get their certificate of eligibility, it's going to tell me as well. Because in their DD 214. Well, actually, they're not going to get DD 214 because they're not discharged. But any questions on that? Certificate of eligibility. So here's what it looks like. Okay. This is what it would look like. And remember we talked about burnt equity, or if they have any loans on their property, that's where they would show up right here. They'll have the loan number, the state that's in, the current loan, and the date of the loan and how much of their entitlement was used. Okay, so if I see that, then I automatically have to recalculate what we're doing now if they're trying to buy a house. So in this case, this person might be buying a house, they already have a loan in Florida. So now I would have to be like, okay, now you're buying a house, another house in San Diego. I have to recalculate how much of your entitlement you have left, which I'll show you how that's done. But that would let me know if there's nothing here, then that means they have 100% of their entitlement. If there's burnt equity, meaning they had a foreclosure, it'll actually here over in the count over in the status over section over here, it'll actually have that documentation that it's burnt equity that the borrower needs to pay this back because they had a foreclosure. Okay, but what we're usually looking for here is this is empty, meaning that there's nothing to worry about. Their branch of their service, their date of birth, social security number, basically same, everything's self-explanatory. If right here, their entitlement code, where it says 05, that right there, underneath there is if the borrower is actually exempt from the VA funding fee, this is where they would put it. It would be right underneath the entitlement code. It would say exempt. Okay, and that's how I know that they don't pay the VA funding fee. Okay. Yeah. Oh, you just go ahead. Okay. All right. Any questions on this? This is pretty self-explanatory. So this is what you're going to ask them for. But the loan officer, that's what I need to see right off. And then like I said, if they're discharged, I'll need to see their DD 214. Yeah, pretty self-explanatory, right? And by the way, if you ever have a borrower who says, I don't know how to get it, it's really cool. They just go to the VA website, and if they haven't used it before, create a user ID and log in, and they can get their DD 214, their certificate of eligibility, they get all their documents instantly and download them, and then send them to your lender a PDF. So they don't have to worry about, I don't know what I did with my paperwork. No problem. Just go to the VA website, and off you go. And if they're not computer savvy, and I do it for my clients. Sometimes they're like, I don't know how, I don't want to do that. Can you do it for me? Sure. So I'll create a user ID and password so that they have it in the future, and I'll just go in there and get what I need. Okay. So types of documents. So if you're active duty, if you're an active duty and active duty military that have been discharged, so that's your Army, Navy, Air Force, and Marines, the 4 branches, right? Their form is the DD 214. If they were in the Coast Guard, their discharge documents CG 71-8A. And then if they're in the reserves, it's a DD 256. And if they're in the National Guards, an NGB 22. Just again, this is the most common one. Every once in a while, I get somebody that might have been in the reserves that I need to get this one instead. But most of the people you're going to deal with are usually Air Force, Navy, Marines, Army. And they'll have that for you. If they don't, again, go to the VA website and they can download it. Entitlement. Okay, so entitlement. When we're talking about entitlement, it's 25% of the county loan limit. That's what it used to be, because that's before when they had before the President Trump came in and said no limits. They used to actually have a limit based on the county limit of the property you're buying. Now there is, which we're going to see later on, where this will come into play is when a borrower has another loan and they're trying to buy another one, then the county loan limits will come into play. Okay, and I'll show you how that works on the formula. So if they're moving from San Diego to Virginia, there's a formula. We have to find out what county they're living in so that I can find out what the county loan limit is, and then I can use the formula to determine, okay, well, if you're going to move there and you have this much of a loan here, then this is how much of a house you can buy and how much entitlement you have. Okay, which you'll see. There's a slide coming up. Break it all down for you. And remember, you get this in case you forget the formula. Okay. Next one. There we go. Okay, entitlement. Okay, so another key thing. So you got a veteran and you got a spouse. All right, as long as it's their spouse, they can both be on the loan together and they can use 100% of their entitlement. They can do no money down. However, sometimes people like, hey, me and my son want to be on the loan together. If the son was in the military, we're still good. But if it's me and my dad, and I was in the military, I can be on the loan with my dad. The problem is now because I'm not an active military and I'm not his spouse, the veterans now got to put down 12.5%. You want to know why it's 12.5? Anybody figure that one out? How much does the bank guarantee the lender? What's half of 25? There you go. Yeah, since the VA is like, well, wait a minute, now we got somebody that's not a veteran that's gonna be involved in this transaction, so they cut it in half. We go, okay, we want you now to have skin in the game. You know, really just in case, because we don't know, or even though it might be your son or it might be another friend, because it can be anybody really. But they're like, okay, now we're a little nervous that somebody that's not a veteran is gonna be on this loan. We want half. Your spouse, that's a different story. Spouse is still 100%. What else? You can so be careful about that when you're adding parents, because I've had people, oh, I'm gonna add my parents to the loan. I'm like, okay, just remember though, you gotta put down 12.5%. And like, oh, we have to put money down. Yes, you do. You know, and the only time I see people are adding parents, you can probably guess why, is because they don't qualify because their income's not enough. So mom and dad help because their income helps them qualify. But now if your dad, like I said, if it's me and my dad, and we were both in the military, that's great. Then we're good. So just to recap, a veteran and his wife or partner, okay, 100% financing. A veteran and anybody that's non-military, 12.5% down. Two military buddies that might just be friends want to buy a house there. That's fine, no money down because they're both in the military. Okay. And I already talked about that 12.5% guaranteed. Okay. Any questions for her? How am I doing? I'm moving too fast. You guys putting down? Yeah. Are you absorbing what I'm putting down? I can't even talk today. Occupancy. Occupancy. Obviously it's gotta be owner occupied, guys. 100, you know, it's you cannot, we'll explain later on, there actually is a way to buy. You can when you buy a house, it's always gotta be owner occupied. Later on, you can turn it into an investment, which we'll get into. But when you buy the house, you have 60 days. This is a key one. I can actually give you a story on this one. 60 days, they've got to occupy the property. All right. So the reason I'm pointing that out is I've had contracts come over where they want to do a seller rent back, and they put 90. And the VA is like, nope, squash, not gonna work. You know what I mean? And then unfortunately, because they put 90 and then they came back and said 60, the VA is like, yeah, right. No, we don't, we're not buying it. So be careful of that. If you're ever going to do a VA loan and the seller wants to do wants to rent back the property, I would actually not, he puts that, I put 59 just to be safe. All right. Do not put 60 or more. And you can't go, oops, that was a mistake. We renegotiated. The VA is like, no, we know what's going on now. It ain't happening. So they have to occupy the property within 60 days. I've never had anybody say that the VA came out and knocked on my door to see if I'm living here. All right, but you just never know. I don't think so that would happen. But and how long do they have to live in the home? Okay, 1 year until a valid change of circumstance. Okay, so they have to live in that property for 12 months. After 12 months, if they want to move, maybe the spouse gets a new job and it requires her to move her or him to move to a different part of the state or another state. You can move and you can then turn the property into rental property, and then we'll go over the formula. You can use the rental, your leftover entitlement, to buy another property and do that one as owner occupied. Okay. Some of the circumstances, change of duty, right? That makes sense. You know, I'm in California now. They're moving me to Virginia. You get deployed. Okay. I had a client that recently just got deployed. He was in Bahrain. I don't know if I pronounced that right. So he turned his property into a rental because he had to go to Bahrain. If you have any type of injury or medical situation, which will require you to move closer to where you're going to get your treatment. Okay. These are exceptions to the 12 months, by the way, is what I'm trying to say. Yes.
How much are the entitlements? So you say they can rent that and then use the rest of their entitlement. So how much is that?
That's what we're going to go over. There's a slide that there's a formula because the formula is based on the county. So where their current loan is and then where they're moving to in the county, you'll see the formula. It'll show you how we would figure out how much entitlement you have left. Okay, that's coming up. But yeah, again, so in case these are things, remember it's 12 months. These are the exceptions of why you can get out in 12 months. Change of duty, deployment, injury or medical, or maybe your wife gets pregnant and you were in a 1-bedroom and now you need 2, right? So they're like, okay, go ahead. Yeah, if you need to move out and go buy a bigger home, no problem. Okay. Entitlement, again, this goes back to appraisers and stuff. So I will tell you this, okay? VA loans, you know, they always require termite. Always. There's no way around it. And this is about the only thing I don't like about VA loans is the dang termite. I've been bitten too many times. Is there a house in California that doesn't have termites? You know, oh my God. Right? I always cringe. I'm like, oh, pray, and the termite, you know, comes back clean. Because then and after what stinks too is after 12 months, that termite report's no good, right? And so if the borrower calls me to do a refi, I gotta have them get a termite inspection again if it's been more than 12 months. And I'm like, oh God, pray. You know, so when it comes to you guys know how you guys I'm sure have your termite people that you like to work with. And I know a lot of times you know, with realtors, you guys already probably have a good idea if there's gonna be an issue with termites. So just prepare your borrower. You know, they're looking out for their veteran. They want their veteran. I'm glad that they do it. I wouldn't want to be a veteran and find out buy a house and you know, and then a couple months later it's falling apart because there were termites and we tried to cut corners and didn't want to do our due diligence. So, um, VA residual income. This is another one that you guys need to know. This one has bitten. I got bit by this a couple of times. So they do qualify from a debt ratio standpoint, but then they have to meet a residual income. So how much money is left over after they pay their mortgage, their taxes, their insurance, their car payment, their credit card bills, their student loans, and then also they also now factor in utilities. Okay, so there's a certain amount that they have to clear, and if they don't clear, they won't approve your loan. And I've had that happen where my client debt ratio was fine, but when they added all the other stuff, he didn't have enough money left over to qualify for the loan. So then we had to pivot and we ended up having somebody else join on the loan with them and we saved the deal, but it was just like, ooh, because I forgot about this. So I think this is funny. This is how old this thing is. I don't know where you can buy a house for $79,000. So let's just forget about that. Okay. Maybe somewhere in Mississippi or Missouri. I don't know. But maybe Ohio. I just don't know. But this is the one you should be concerned with. So any loan amount over 80,000, and we're in the West. Okay, so this is the number you want to be with. So if you can see that. So if it's just a single person, after they pay all their stuff, their mortgage, their property taxes, their homeowners insurance, their HOA, student loans, credit cards, automobile payments, and utilities, they have to have about $491 left in their income in order to meet the disposable income requirement. As you can see, it goes up, which makes sense, right? If you have a family of two, it's not quite double, family of three, family of four, family of five. Okay. I haven't had it happen a lot, but occasionally it does happen, because when we pull your credit, we only see what's on your credit report. And then I always forget with a veteran, though, I also have to get the form filled out for the utilities and the other stuff like that. And it's like, so you got to make sure that this doesn't bite you in the butt. Like I said, it's only happened to me maybe once or twice. But you don't have $500 left out there after you pay all that stuff. But we haven't even talked about eating. Right? Or fun for me, what I mean? It's like, $500 you haven't eaten yet. You still have because we don't factor in groceries and stuff. But that's crazy. All right. Property requirements, obviously titled, it's gotta be titled as real estate, it cannot be commercial. It has to be 1 to 4 units. The VA, if it's a condo or a townhome, it has to be VA approved. I'm sure many of you got bitten by that before, right? You find out that the condo complex, your borrower gets all excited about it, and only to find out the VA hasn't approved the complex. However, there are some lenders that will do spot approvals on VA. I haven't had many success with them, but what I wanted to point out was here's a great opportunity, guys. This one right here. So the 1 to 4 units, right? Think about that. So a veteran can buy a 4-unit property with no money down. He's got to live in he or she. I'm sorry, I don't mean to sound sexist. Women serve in the military too. He or she has to live in one of the units. But here's the beauty: the 3 other units, even though he doesn't own the property yet, we can use the rent that he's going to get for those 3 units to help him or her qualify for the payment, even though he doesn't even own it yet. Even if it's vacant, then we just get a 1007 market rental survey, and the appraiser tells us how much you can expect for each unit, and that's the number we'll use. I've got a lot of veterans that didn't know that they could do that, and now they're doing it. And they're buying 4 units, so they're loving it, because guess what? The rent from the other 3 covers the mortgage payment. So they're living for free. Right? Wow, it's right. I'm like, how cool is that? So we got 4 units all over the place, so if you can find one for your veteran, jump on it. What a great deal, and especially with the amount of rents that we're charging, 3 units, probably, I don't know, $3,000 a unit. If let's say you get 3 of it, that's $9,000. There's a good chance that his mortgage payment, his or her mortgage payment's not gonna be $9,000. Even for that 4 units. So most likely that's gonna cover, so the veteran gets to live in his house for free. So, and like I said, I've had quite a few veterans jump on that and bought 4 unit properties. They're loving it because then also the value keeps going up, and and the rent covering, and like, this is great. I don't have to make a mortgage payment anymore. And remember, they have to live in one of the units. Now, I'm not gonna say that I've never had a veteran not live in one of the units. It's what they do after they buy the house, that's up to them, but good stuff. The VA approved condo town, usually every once in a while I run into where it's not approved, but you can try to do a spot approval. Sometimes the VA will do it. I really haven't had a lot of luck getting a VA spot approval. I've had more luck with FHA than I have with VA. But you definitely want to make sure.
What's a spot?
Oh, so spot approval. So what they'll do is the VA will have, like, if it's not approved because nobody's ever tried to get it approved, what they'll do is they'll actually have us get like an HOA questionnaire, which will show how many units are rented, the amount of insurance, the budget, all the minutes and the notes. We package that up and we send it into the VA, and the VA will actually look at it. It usually takes a couple of days. They'll review all the information and decide right there on the spot if they'll approve financing for that one particular unit. There's a more formal process to get the whole complex approved, which is different. This one, they'll be like, okay, we'll do a loan on for this particular borrower for that specific unit. Okay, so after that, though, it doesn't mean the complex is approved. Somebody else that wants to buy would have to go through the same process. So, yes.
Is there a fee for spot approval?
For spot approval?
Yeah.
Yeah, there usually is. It depends on and with the VA, it depends on the size of the loan amount and what they'll charge. Sometimes it can be as cheap as $400 or $500. Sometimes it can be thousands if it's a really expensive area. You know what I mean? But and I know the borrower, unfortunately, the borrower's got to pay for it. It's not something we can float in escrow, because what if they don't approve it? They want their money for doing the work to tell you no. Right? And we want to get paid for telling you no. Thank you. Yeah. All right. Here we go. This is what you've all been wondering. How do we determine if a borrower can buy another house while they still have their current VA loan? Okay. So here we go. So find the VA loan. First thing you're gonna do is find the VA loan limit in the county where you plan to purchase a home. Okay. So in this example, I don't know where it's at, but the county loan limit's $900,000. Okay. That's where I'm moving. The loan limit's $900,000 for the county. Okay. Number 2, calculate the maximum VA guarantee amount. So this is how, here we go. So we're going to take the county limit, which is $900,000, and we're going to multiply it by 25%, because why? The VA guarantees 25%, right? Okay, so we take the 900, we multiply it by 25%. That gives me $225,000 that they'll guarantee. This is your total available entitlement for the property. So there's $225,000 for this specific house that I want to buy in that county. I have $225,000 in entitlement to use. Now we got to identify how much I've used. Okay, so let's just say my current house, let's say it's San Diego. Okay, I've already got $50,000 tied up here in San Diego. Okay, we're gonna go over here. I'm gonna take that 225. And we're going to subtract the $50,000 I already have tied up here in San Diego. So that leaves me with $175,000 of entitlement. Okay. Now, follow me here. This is where some people get lost. Remember, that's 25%. So we got to multiply that by 4, because that's what the VA is guaranteeing. That represents 25% of the purchase price. So we got to take that $175,000. We're going to multiply it by 4. So that means I could actually buy a house for $700,000 in that county. Does that make sense? All the math, right? Okay, so if I'm living in San Diego and I get transferred to another county and I want to buy a house for 900, I would have to tell my realtor, you know what? Because I've already got 50,000 tied up here, you got to find me a home for $700,000. Now, anything over that, I got to come out of pocket. So if they find me something for 750, since they're only gonna give me a loan for 7, I'd have to come up with that extra 50,000.
50,000?
It was just an example. I'm just saying, it's an example of saying, well, if a person's house right now and their house, let's say it was San Diego, wherever you want, whatever state you want to make it. Let's just say for this example, I had 50,000 already tied up. Okay,
But it would be 25% of the original. Oh?
yeah, the $50,000 of entitlement would have represented 25%. I know that's not feasible. In San Diego, this number is gonna probably be a lot higher. I'm just doing it for easy math.
Is that the loan amount that you?
No, this was the entitlement.
So that
This
would
is-
come on like 400,000.
Exactly,
Yeah.
right. Yeah.
So on a $400,000 house, your entitlement is
50,000.
400?
It's 50 grand
50,000.
That you've already got tied
that
up.
you got tied up. If I bought a house for 400,000 in San Diego, the VA guarantees 25%.
Oh, I see.
Okay, actually, that 25% is 100. So, okay,
So that
so
would be 100,000.
that would mean I'd have 100,000 tied up.
Tied.
Okay, but in this case, they tried to just use the math, so that's 50 grand. So you take the 900 minus the 50, or excuse me, 900 times the 25, then you subtract that from the 50, then you multiply it by 4. So again, is the one thing I can tell you with this example, it's actually easier to move east to west
Yeah, more expensive.
than it is west to east. Is you figure out, right? And if I'm already in Virginia where the houses are a lot cheaper, that entitlement number probably is something really small, right? And I moved to San Diego County where, as well with the San Diego County loan limit's on 1 million, it just changed it. I was just gonna round up. I think it's 1.1 million and close to it. So check that out, right? So I got 50 grand tied up in Virginia, but I moved to California where I got a loan limit of 1.1 million. Obviously, when I multiply it by 25, where my purchase price is a lot bigger, I can afford more. But when you go from here, you've got so much already tied up where you're going. You might end up having to come out of pocket. I do know that most people that are in California that do get moved end up having to come out with a little bit of money because it's just they've got so much of their entitlement stuck up here in California. Compared to where they're moving to, and so better to go east to west than west to east. So if you're in the military, does everybody get that? Make sense? Right? Follow the map. Remember, you're gonna get the slide anyway, so you can always refer to it. No. All right. So, there you go. So, any questions? Anything I didn't cover? Yes.
So if they go from west to east and they have a lot tied up here,
Yeah.
what if they sell the house and they're free and clear from it?
Then they get all of it back.
They get all of it back, okay?
Yeah, the minute you sell your home, you're within no joke, guys, it's fast. Like as soon as you sell a home, the VA gets notified by the escrow, the loan gets paid off. So let's say your lender is Wells Fargo. Wells Fargo usually will notify they have a timeline. Usually within 24 to 48 hours, the VA's already been notified that your loan is clean and your entitlement's restored. Yeah,
And then for the,
it's really that fast.
then for the spot approval for the condo,
Uh-huh.
does that designation stay with that condo if they sell
That
it?
unit,
That,
but not the complex.
That unit, it stays with it even if they sell it,
Correct.
so it'll be kind of like listed, it's
That unit is.
that unit.
Yeah. Yeah. Yep.
Cool.
That's cool.
So,
What was I gonna say? Was there anything I missed there? Benefits. So we covered the VA FICO, yeah. So remember when you go to your lender, whoever you're using, if you want to use me, I'm never too busy for your referrals. So just so you know, when you go, let your veteran know not to be discouraged about if one bank is told them no because their score wasn't high enough for it, that just means that bank wasn't gonna do your deal. I have lenders that'll go down to 540 FICO score. Personally, if your FICO score is 540, I don't think you should be buying a house. There's a reason your score is 540. Okay, it's not because you pay your bills on time.
Mhm.
Okay, But I digress, I'm saying, if they wanna buy it, they'll do it, but yes, sir.
One last question.
Yeah, sure.
Bridge loan for a VA, like, let's say, they're trying to sell their current home, but in order to sell, but they wanna move to the new one first, and then have the current, get sold. Is there anything like for a VA?
Bridge, no, they're gonna, if they wanna,
They wanna
they wanna move first and then sell.
Yeah.
Yeah, then unfortunately, what they would have to do is they have to get a regular loan,
Bring
buy the new one, and then when they sell
their current.
their current residence, they can refinance it into a VA so they can get it, because they're gonna get a much better interest rate than if they go Fannie or Freddie. But yeah, unfortunately, they're gonna have to, there is no VA bridge loan.
Okay.
Yeah, so, but yeah, keep those things in mind. FICO score, remember, they don't have, let your borrowers know they do not have to worry about the size of the loan if they can qualify for it. So be it, so they don't have to worry about that. They can use as many times as they want. All right, a couple of things I want to help you guys with really quick, because I know you guys I got more things to do than listen to me all day. Credit scores. Let me give you a couple of tips, some really cool things. If you have a borrower's credit score isn't the greatest, here's a couple of tips. You might have heard them all, but if you haven't, this is good. One of the things you can do, it's still, the credit bureaus haven't fixed this, and it's been 20 years and it's still going on. So I was born in 1969. My mother was born in 1942. Okay. So the reason I pointed that out is, after my divorce, long story short, my ex-wife wasn't paying the bills that she was supposed to, and my credit was being affected, right? So my score had dropped, and I wanted to buy a house. So I called my mom, and my mom made me an authorized user on her Sears card. Remember Sears? Sears, which she had since like 1950 something, right? Well, I was born in 69. So when it shows up on my credit report, that I've had credit before I was even born. My FICO score jumped 112 points in 48 hours. I did a rapid rescore. I put it in, my mom called her thing. We waited 48 hours. She gave me the thing, the evidence that I was an authorized user. I sent it in the credit bureau because I paid for the service. It's something I can do for your borrowers. I can pay for this. It's a 48-hour turnaround, and they instantly, all three of my scores just boom, shot up. So that's a really quick fix. So if you've got a borrower whose credit score isn't the greatest, be like, hey, did your mom and dad trust you? Yeah. Do mom and dad trust you? Make them have you be an authorized user on their oldest credit card. And preferably a card though that they don't have maxed out. If they put a credit card on your thing that shows a $5,000 limit and a $5,000 balance, that's not going to help you. Okay, so remember, that's another key thing with credit balances. You guys might know this. If you're 51% hurts you, 75% kills you, and 100% or over your limit will bury your credit score. Okay, I've seen people who've never missed payments on their credit score ever, and their credit scores are in the low 600s, high 5 because every credit card is maxed out. Okay, it takes that into consideration because they're looking at statistically, when you max out your cards, you're more likely to do what? File bankruptcy or default, right? You just have one more card that puts you over the edge and I can't pay, and everybody loses. So they factor that in. And now another thing I want to share with you guys is when your borrowers call you up and say, Mike, and you say, when the prospective buyer, they want to get pre-qualified, how you're going to usually ask them, how's your credit? Oh, my score is 740. Find out where they got that from. 99% of the time, they're going to tell you it's Credit Karma or freecreditreport.com. Here's the problem with that. That's a consumer credit report. The mortgage industry and the automobile industry each has their own different formula. So today, I could apply for a mortgage with me and my score be 680. I can go right down the street and go to Toyota. They pull my credit and be 600. And Credit Karma says my score is 700. Because the formula is completely different for all the industries. So when they do that, just be like, well, who pulled your credit? Oh, it's Credit Karma. I got free credit right now. Okay, well, be prepared. It could be different when you apply for a mortgage because it's coded differently. Right? They weight things differently. Okay. I've seen that over and over again. Mike, and they send me their Credit Karma score. I'm like, I understand, but that's not the credit bureau we use. Why not? I don't make the rules. Sorry, So remember, authorized user. Also, please, here's another one that I see that can help you guys, not just VA, but just credit issues that will kill a borrower's FICO score. Never, ever, 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 ever have a borrower pay off an account that's a collection that's over 12 months old. Here's why. The credit bureau doesn't care if the collection's $1 or $50,000. The amount of the collection does not affect your FICO. It's the recency of the collection. Okay, so if you have a collection that was 13 months ago, it's no longer affecting your FICO score. But you go and you pay it off, and then they report to the credit bureau that your collection's zero. The credit bureau just sees that you've had collection activity now in the last 12 months. Even though it was good activity, you paid it. FICO score goes down. Do not. I've seen too many people. My realtor I hate to say this, guys. My realtor told me to pay that off. Oh God, no. The only way to fix that is then we got to call the collection agency and beg and plead that they take it off your credit report. And sometimes they will. They've been paid. Why not? Okay. And they'll give you the letter. I send it in the credit bureau, and 48 hours later it's off. But there's some collection agencies. I have a client right now. He had a triple bypass. He had a heart attack. Dish Network put him in the collections. He was in the hospital. He had a heart attack. And he could prove it. He gave them his discharge papers and his medical bills. He paid it as soon as he got out of the hospital 3 months later. Triple bypass, right? He was in the hospital for months. They sent him to collections. He paid it immediately. They won't take it off his credit. Dropped his score from 720 to 640.
Yeah.
So he still qualifies, but the interest rate he got is not as good as he would have got 720, and they will not. I called and tried that, and they're like, no. I'm like, come on, why are you sticking at this guy? He proved this was not me not wanting to pay my bill. He was in a hospital for crying out loud, and the collection was $43.
No, what?
I'm not joking, guys. So please remember that. Don't pay off collections in the last 12 months unless you can get it removed. Then go ahead and do it. Parents, authorized user. Your limits, keep those credit cards under 50%. Okay. And then also one more thing. Your credit history, this is weird. Figure this formula out. Whoever designed this, your credit history is part of your score, how long you've had credit, your depth. So you would think it'd be the year you were born till the present year, right? So let's just make math easy and say I was born in 70. So you would think I'd have 56 years of credit. It's 2026. They don't do it that way. They take that 56 years, and to make math easy, let's say I have 4 trade lines. They take 56 and divide it by 4, and they go, oh, you only have 14 years of credit. Okay, so what happens is, where I'm going with this is, if you close an account, maybe when it's been years and you never used your Visa you got when you're a teenager. Oh, I don't even use that anymore. And you close it, well, then it's gonna go to the next oldest credit card. Now you just shorten your gap for your time for your credit. So don't close out your credit. And then, just so you know, that if you don't use the credit though for 12 consecutive months, if there's no activity, the credit bureau will stop giving you credit for it. Even though it's an open account, it'll stop giving you credit for it. So every once in a while, if you're married, buy your wife some flowers, put it on your Visa card, or take her to dinner, or buy some gas, just at least once every 12 months to keep that card active. Because once you go 12 months with no activity at all, it stays open, but the credit bureau says we're not giving we're not going to give you credit for it in your FICO score. So keep that in mind. All right. Some quick tips from Uncle Kev. Any questions? Right? Good. So you guys all get this. I'll get your certificate, get to you in within 7 days. I will get your emails, and I'll email you your certificate, and then you'll get this presentation so you can constantly reference it. My information's on there. Also, just so you know, anytime I do a VA loan, I donate 10% of my check to the VA in their name. So to a charity of their choice. So I like to do that. I think that's the least I can do for people who serve us. And then also, if you have questions, call me, text me, email me, whatever. I'm happy to answer. Hey Kevin, you said this. What would happen if they did this? If I'm happy to. I still have better people call me all the time that have gone through my class. Hey, what about this? Can we do this? Can we do that? Happy to help, even if I'm not going to get the line. I don't care. I really believe in the law of reciprocity. The more you help people, the more it comes back. So whatever I can do to help you guys. And thank you for having me here.
There, everybody.
Yeah, please. If I don't have your email, I won't know. And don't worry, I'm not going to be bombarding you with advertisement. It's just simply so I know where to email your certificate and the presentations. All right. I might call you every once in a while just see how you're doing, but I'm not going to start bombarding you with more. I don't know about you guys. Every morning I wake up, I'm like, oh God, 200 emails. delete. So Thank you for your time. I hope you guys enjoyed this.
For the restaurant for lunch, so please help yourself outside.
Yeah, guys.
This is the second ship, remember?
Yeah, yeah. Go eat. Lunch.
I just got a whole bunch of posts about Realtor.
Seriously?
Yeah, we're gonna
James and myself,
Oh,
we
yeah.
are close friends with them.
Got it.
And that's so nice for that seller, it's still sticking there.
Yeah, you know,
Hey.
So we wanted to see some.
You know,
Yeah, where was it? I know, I couldn't offer from that, but I was yeah.
So we heard someone reach out.
Yeah, good enough. Fine, I don't feel bad. Yeah. That's the reason I'm yeah. After, yeah,
No.
Yeah.
And bringing the whole family. You guys work together.
Make sure you sign this book before you leave. What's that? Yeah. Now you do. And like I said, you'll have this, so if you forget, you can.
Yeah.
Slide, yeah.
Yeah, my dad's a veteran and so I. So.
Was it done?
Yeah.
Yeah, exactly.
Yes, it's a lit. Like I said, well, anybody check and see. I can tell you this. I do know a couple of things that Buffalo units. The nuggets. I know, that's correct, you know, but this is always a make sure. All these things too. See what's going on here. But yeah, his dad's gonna buy. Here's the thing, I remember. As long as the units. Especially this. Yeah, you already own a house and I was buy a 4-unit here. They're gonna, then I might ask you if they explain this or not. And you want property? Yeah, you know what? I wanted to be offered some life. They have family. Well, it's, yeah, I think, yeah. So, it's actually. I think like Kevin's son, I think those being here. Very, like I said, that's, most of the patients, 70. Thank you. Pretty good. I know. The boss made so much money.
It sounded quite long.
He was like,
Oh, yeah. Are you a?
That's the way to go, man. I mean, you saw the thing, I think about.
Oh, that was.
He's yeah, his time and he was really discouraged when he tried to beat himself. Maybe I will try to use my dad's video. I know he didn't use it.
Yeah, I was there by it.
He's there for.
Well, yeah, if he wants to be on loan, if he wants to be on loan, then you gotta do. So I would guess dad's okay with doing the loan and whatnot, and he trusts his son and he'll make the payments now, I would expect, you know,
Yeah.
so be it.
Yeah.
Yeah, you know,
There you go.
that's the way I can tell you this, it wouldn't be the first time I've seen a better buy a loan. You know what I mean?
Oh, no.
Yeah, you know, you know, some part of me probably thinks the VA probably sometimes, but if you're making your business, really, I've never had anybody complain to me, every time we had the VA showed up at the door to make sure. I've never had that. For 34 years of my life. Well, eat, guys, eat. It's good. On the veranda.
No, I
James, you popping our details down?
Yeah.
It was the vote.
Thank you so much, Kevin.
You're welcome.
You've been doing this for a while, so.
The class?
The class.
I've been
And I used for 34 years.
34 years.
Started in 1992. Right out of college. Yeah. And did on that photo. He had on this. I just, when you graduate, you just want to get a job.
Yeah.
And I got a job for a finance company back in Chicago. And I was working there and they taught me how to, I do personal loans and mortgages.
Yeah.
And then I got my own branch, and then the problem is we kept our papers, so I had to do collection stats, so you guys payments. But I was, I did not like collecting on people. We did some
Very tough conversations.
It's my job, when you're your boss, and I'm like, okay, and we just paid them, like.
Ali said I said.
So, and so like, I don't wanna do that anymore, so I just went to the company, and I'm like, well, the thing to do is sell loans, that's it.
Yeah. It's a much nicer sale.
I worked at those, let somebody else deal with it. Worry about it. Yeah, we are 20 years later, still doing it. So, yeah, I enjoy it.
Time just flies.
I was gonna be in the young guy, but I'm not interested in now. Right, yeah, right. I see why I take people to applications now, and I'm doing their needs tonight. God, I graduated high school next year. You know, I just realized, this guy now, I'll go, I'll guy in the room. It's all good, you know? My son's.
Yeah, we'll sign in and then we'll go outside.
Okay.
It's like, all right.
Have you met Jake? We're business.
You're from Encinitas?
That's where I live, yeah.
Okay.
And I was in that new community. I was actually.
Oh, yeah.
Yeah.
I just have another friend that talks about it all the time.
It's nice.
Yeah, it's
One of
cool.
my clients, like, I helped him do a 1031 exchange.
Oh, nice.
And I had just gotten divorced. I'm like, who are you gonna rent it to? He's like, I don't know. I said, I'll take it. And he's like, seriously? I'm like, yeah.
Nice.
He's letting me rent it from him.
Wow.
Yeah,
That's
it's
cool.
nice. He's in phase one, so I'm in what they call the carriage house. So it's a 1 bedroom and a den, and it's above the garage. And then, so beautiful open kitchen, dining room, 1 bedroom, den, 1 bath. But on top, he's got the deck. And in Katie, it goes like this, so I have ocean view.
Ocean views, that's great.
It's freaking sweet, yeah.
That's awesome.
Yeah, I'm up there all the time at nighttime, that's why I always glass of wine and watch the sunset, it's just freaking beautiful.
It's it's like a master plan community
Yeah.
with all this.
The clubhouse is almost
activities,
done.
clubhouse,
Yeah.
that's crazy stuff.
Clubhouse will be done in March.
Farm, right?
Yeah.
Like a
We have a full farm, all the food in the market is from the
Right.
farm.
farm.
Farm to table.
Yeah.
Yeah, and they have a really funny thing is they have a restaurant right on top of it. It's I forget the name of the restaurant, but we didn't know. My buddy and I I invited him over. I'm like, let's go to the restaurant here. We figured it was like like a TGI Fridays kind of like American food. Right? We get there thinking we can get a burger and a beer. Oh no. Oh no, it was a fancy menu and they had like that we had an appetizer called lobster bread. I'm like, it was ridiculous. And when we're looking for like burgers and fries, you know, everything was like seafood and steak and chicken and it was expensive. And I'm like, and we're looking around the room and it was all couples and just him and I. I'm like, okay.
You just want a
Yeah.
greasy burger.
Yeah, that's all we want. We want
Greasy burger,
and
burger.
just wanted greasy burgers and fries, and we thought they might want to watch some.
Yeah.
There were no TVs because we were thinking there'd be a game in there. There were TVs.
Nothing.
No fireplaces. It's very old. It's more of a romantic.
Funny.
That was kind of funny, but the place is great. You know, it's the only thing they screwed up was the parking is horrendous. You know, it's so I have the guy that
Yeah.
it only comes with a 1-car garage, right? Well, he travels a lot, so his Maserati's in my garage. So
Yeah.
I always have to park outside. Well, in the beginning it was fine. Well, now that the community is almost done, it's almost if you try to leave your house at 7 o'clock at night or after, there's nowhere to park.
Oh, there's.
No, seriously, I end up having to
Just
park
park in the car.
horizontally. Yeah. I have to park horizontally in front of the garage, and then get up early in the morning before they tow you. I'm like, who designed this? There's no parking, and they won't let you park over by the. So there's this big dirt parking lot where everybody parks over by the market. I'm like, can't we just park in there? And like, nope. I'm like, why? Like, we don't want people parking there. I'm like, why? At nighttime, there's nobody there. But that community on weekends is nuts. Yeah. So the golf course is right across the street, right? Well, and I walk my dog like on Saturday morning.
Yeah.
I walk my dog like 7 a.m. They're already coming in and car after car parking because there's this big green belt that we have. Right. And then we have a brewery there as well. So all the moms and dads, their kids, they bring their blankets and their kids, and they're there all day drinking beer and drinking wine, and the kids are playing around. And they use the parking, and they're there all day. And then the problem is we put signs up that say, no, you cannot go past here. It's for residents only. You think they care? No. Because I'll come and I'll see them. They'll park right in front of my house and they'll get all their something. They'll walk over. Yeah. So that's the only downside is on weekends. It's nuts. People are there all day. They literally will stay there all day, because the dads are drinking beer and they have wine and moms are drinking wine. Kids are running around.
Perfect for the family.
It's our family.
spot.
Yeah. Go ahead.
You get some first.
Oh, I did. Yeah. Go ahead. I'm glad you like it. Did you sign in?
I did.
Yeah.
Let's see.
Just make sure that everybody gets signed in so that they